Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Byron Loflin. He's vice president with Nasdaq CBE Governance Solutions, and we're going to learn how CBE is supporting the boardrooms with the solutions that it provides. Byron, welcome to the market site. Thanks so much for joining us. This is exciting. Recently, Nasdaq announced the acquisition of CBE. Can you tell us more about the solutions you provide and how it aligns to support America's boardrooms?
Sure, quick history. 15, 20 years ago, in the boardroom, there were very little board assessments being conducted. And what evolved really out of the financial crisis beginning in 2008 was more scrutiny around what boards are doing to self-evaluate, because there is really no standard or there's no requirement to do a board assessment except for certain exchanges around the world say that you must at least do a board assessment each year. But boards began looking at themselves and saying, we want to do better. And so what we primarily have done is built a more standardized format for doing board assessments so that boards and people on boards can compare themselves and begin benchmarking their performance year over year or against, say, two boards that one board member sits upon.
All right, now how do robust governance processes, how does that help the company and their relationships with stakeholders, shareholders, companies, employees?
Sure, great question, Jill. The whole notion, if we go back to one of our luminaries in business from the 50s and 60s, Peter Drucker, he said, what's measured improves. And so this notion of improving and the desire to improve, that's been drilled in through management for many years. Well, we've basically mastered that. The business schools are full of books on management. However, where there was a dearth of information was around board performance. And so boards starting to look at themselves and thinking forwardly, coming out of the financial crisis, said, we can do better. And that's where we come in, we provide a more standardized format that's easy, it's an online and then follow-up interview approach where board members in the end receive a report that's easy to read and they can look at themselves and say, here's areas where I can, action points if you will, where I can perform better in the future, both as an individual board member, but then as a board at large.
All right, let's talk about the institutional investor and activist. Why are they increasingly more interested in what's happening in the boardrooms?
The institutional investors have looked at governance and identified, and the data is starting to come out now, that good governance means better performance. I've heard it said that happy employees are more productive employees. That's an important part of governance because the board sets the tone from the top. They work with management towards alignment. That alignment in any organization is identified by the rank and file employees. And it's important to them to know that the board and management team are working together to care about their jobs. Those types of companies are going to outperform, in the end, companies that don't care about their employees as passionately as ones that are authentic and do.
All right, to wrap up here, let's talk about some of the trends that you're seeing going into 2020 that you think is really going to be the focus on board planning for the next year.
So we're seeing things like companies are looking at their purpose. The Business Roundtable brought this up. It's an important topic, but it's not a new one. There's been people that have looked at purpose for 20, 30, 40 years. It's just becoming more mainstream today. If we go back to Jim Collins' book, Good to Great, you look at leaders at Gillette and at Kimberly-Clark that took purpose very seriously. Now what has happened, in 2020 we're going to see purpose more mainstreamed, and they're looking at things like ESG, environment, social governance, and saying, how do these impact our corporate strategy over the next 10 to 30 years, instead of just looking at the next 1 to 5 years.
All right, Byron, thank you so much for joining us at Market Site.
Thank you, Jill.
And thank you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.